You modified your strategy again this week. Maybe you added a filter, maybe you changed the time frame, maybe you swapped one moving average for another, or you added a confirmation candle, or you narrowed the session window because you read somewhere that the New York Open is cleaner than London, and you told yourself you were improving it, refining it, getting closer. But here's the question you did not ask yourself before you made the change. Was it actually broken? Or did you lose 3 trades in a row? And the discomfort of that losing streak made the strategy feel fragile. And you reached for a modification the same way a person reaches for a painkiller? Because that is what most strategy changes are. They are not analysis, they are painkillers. They are your brain's way of saying, I cannot tolerate the feeling of this system not working. So I will change something, anything to restore the feeling of progress. And you did. And for about 2 days, the modified version felt fresh and hopeful, and then it lost again. And you changed it again. And you're now on version 9 of a strategy that might have worked perfectly fine on version 2 if you had just let it run. By the end of this video, you will know how to actually fix your strategy. And I mean actually fix it, not tweak it, not add another indicator, not switch the time frame. I mean diagnose whether it is genuinely broken or whether you have been breaking it yourself through interference, and then build the structure to stop doing that. You will have a specific protocol, a minimum sample framework, and a set of principles for building a strategy that fits your psychology instead of fighting against it. And the cost of not understanding this is not just another month of backtesting, it is the slow grinding erosion of your ability to trust any system at all. Because if you change the rules every time you feel discomfort, you never build the one thing that actually makes a strategy work, which is repetition, consistent execution over a large enough sample for the probabilities to express themselves. And without that, you're not trading, you're experimenting endlessly alone with your own money. So let's start with the sentence you have been saying, my strategy doesn't work. You say it to yourself after a losing day. You say it to the chat, you say it to the YouTube comments, and it feels true, it feels like a fact. But I need you to interrogate that sentence, because in most cases it is not a fact. It is a feeling dressed up as a fact. And the difference matters enormously. A fact is, I have taken 60 trades using this exact system, following every rule, and the expectancy is negative. That is a broken strategy. That is a real problem that requires a real solution. But what most of you are actually saying is, I took 11 trades and 4 of them were emotional entries that had nothing to do with the system, and 3 of them were losses, and I got scared, so I changed the rules. And then I took 6 more trades with the new rules, and 2 were losses, and I changed the rules again. And now I have data on 4 different versions of a strategy, none of which were traded long enough to know if they work. You do not have a broken strategy. You have a broken relationship with a strategy. You have an inability to sit inside a system long enough to find out what it does. And that inability is not a strategy problem. It is the operator problem we talked about in the first video, running through the emotional shortcuts we broke down in the second. It is your nervous system, your need for control, your intolerance of uncertainty, expressing itself through the act of modification. You're not fixing the strategy. You're soothing yourself. But before I show you how to actually evaluate whether a strategy is broken or whether you're just panicking, you need to understand why your brain is compulsively driven to modify things mid-sample. Because if you do not understand the drive, you will keep obeying it, and you will keep calling it optimization. Here's what is happening neurologically. When you take a loss inside a strategy, your brain does not process it as one data point in a large sample. It processes it as a pattern, a threat pattern. 1 loss means the system might be failing. 2 losses mean it is probably failing. 3 losses mean it is definitely failing, and you're in danger. This is called pattern completion, and it is the same mechanism that made your ancestors run from a rustling bush after seeing one predator. Because waiting for statistical confirmation got you eaten. Your brain is designed to complete the pattern from minimal evidence. It is designed to generalize from 1 or 2 events and treat them as permanent. And in trading, where losses are frequent and emotionally charged, this wiring is catastrophic. Because a 3-loss streak does not mean the strategy is broken. In a system with a 45% win rate, a 3-loss streak is statistically expected. It is not a crisis, it is Tuesday, but your brain does not know that in the moment. Your brain feels the losses as a cascade, as evidence of failure, as a signal that the structure is collapsing, and it generates an urgent action impulse. Change something, fix it, do not just sit here and lose, and you obey. You modify, you add a filter. You tighten the stop, you change the entry. And the anxiety drops, not because the modification is good, because you did something, because you restored the feeling of agency. And that relief is the product, the modification is just the delivery mechanism. This is why you cannot fix your strategy while you're in an emotional state. You literally cannot. The part of your brain that wants to modify is not the part that can evaluate. They are different systems. The modifying brain is reactive, fast, threat-oriented. The evaluating brain is slow, deliberate, statistical. And when you change your rules after a loss, you're letting the reactive brain make decisions that belong to the evaluating brain. You're letting the panic response write the trading plan. And that plan will not work. Not because the idea is bad, because the author was not qualified to write it. So here's the first and most important question you must answer before you change a single rule. Is the strategy broken? Or am I broken inside the strategy? And the way you answer that question is not by feeling. It is by data. And the data has requirements. You cannot evaluate a strategy on 11 trades. You cannot evaluate it on 20. You need a minimum sample. And that minimum sample is 30 clean trades, not 30 trades where you broke the rules. Not 30 trades where 4 were emotional shortcuts and 3 were revenge entries and 2 were boredom trades. 30 trades where you followed the system exactly as written, where the entry met the criteria, where the stop was where the system said, where the exit was where the system said, where you did not move, add, reduce, or override. 30 clean executions. That is your minimum sample. And if you have not taken 30 clean trades with your current system, you do not have permission to say it does not work. You do not have enough data, you have noise, you have a feeling. And feelings are not statistics. But here's the problem, and this is where the previous 2 videos connect directly. You probably cannot get 30 clean trades because the emotional shortcuts keep interrupting. You take trade number 7 as a boredom trade, trade number 11 is revenge. Trade number 14 is anxiety. And now your sample is contaminated. You have 14 trades, but only 10 were clean. And those 10 are not enough to evaluate. So you do not actually know if the strategy works. You know that you cannot follow it consistently, and that is a different problem. That is not a strategy problem, that is you. And fixing the strategy will not fix that. You already know this. You have felt it every time you change the system. The same contamination happens within a week because the contamination is not in the rules. It is in the operator. So if you have not yet built the ability to execute cleanly, go back to the 90-second intercept, go back to the emotional audit, build the operator first, because no strategy, no matter how elegant, survives an operator who cannot follow it. You would not blame a car for not driving if the driver kept yanking the wheel every 3 seconds. And that is what you're doing. You're yanking the wheel, and then you're blaming the car. But let's say you have built some execution discipline. Let's say you can get 30 clean trades. And you look at the data, and the expectancy is genuinely negative. The win rate is lower than the back test suggested. The risk to reward is not holding. The drawdown is deeper than the system should allow. Now you have a real problem. Now the strategy might actually need fixing. And this is where most traders go wrong in the fix itself. Because they do not diagnose, they renovate. They tear out the whole system and build a new one. Or they add 3 new filters and 2 new confirmations until the strategy is so complex that it never triggers, and they call that being selective. That is not fixing, that is hiding. That is building a strategy so restrictive that it protects you from the discomfort of being in a trade. And you will never get a sample, and you will never know if the core idea had merit, because you buried it under so many conditions that it cannot express itself. The actual fix is surgical. It is specific, and it starts with identifying which component of the strategy is underperforming. A strategy has 4 components: the entry, the stop placement, the exit or target, and the trade selection, meaning which setups you take and which you skip. And when a strategy is underperforming, it is almost always one of these 4, not all of them. And you need to isolate which one. You look at your 30 trades, you look at the ones that worked and the ones that did not. And you ask, was the entry correct but the stop too tight? Was the entry fine but the exit too early? Was the entry itself the problem triggered by a condition that does not actually correlate with the move? Was the trade selection wrong? Meaning you took trades in conditions where the system has no edge. You isolate the broken component and you fix that one component. You do not touch the other 3. You do not add a new indicator. You do not change the time frame. You do not rebuild the system. You fix the one part that is failing, and then you run another 30 trades and you evaluate again. This is how you fix a strategy. Not by gut, not by frustration, not by watching a video at midnight and rebuilding the whole thing. By data, by isolation, by surgical adjustment, and by patience. But there is a deeper question underneath all of this, and most traders never ask it. Does this strategy fit you? Not. Is it a good strategy in theory? Not. Does it back test? Well. Does it fit the specific nervous system, the specific psychological wiring, the specific emotional patterns of the person executing it? Because a strategy that works beautifully for a trader who is calm, patient, and comfortable with low frequency will destroy a trader who is anxious, needs frequent feedback, and struggles with boredom. And a strategy that works for a trader who can sit with a wide stop and a slow development will psychologically break a trader who needs tight stops and fast resolution because the uncertainty of a wide stop is unbearable to them. The strategy is not the problem. The fit is the problem. And most of you have chosen your strategy based on what looks good in a back test or what a popular educator runs, not based on what your nervous system can actually sustain over 100 trades. So here are the 5 principles for building or choosing a strategy that fits your psychology. And these are not generic. These are specific to the operator you discovered in the previous 2 videos. Principle 1, match the frequency to your tolerance. If you overtrade when you're bored, you need a strategy that gives you enough legitimate setups to stay engaged. Not 10 a day, but enough that you're not sitting for 4 hours with nothing, because 4 hours of nothing is where the boredom shortcut lies. If you struggle with patience, a daily swing strategy will torture you. You need something with more frequent decision points. Even if the individual trades are smaller, the strategy must give your brain enough legitimate activity that it does not manufacture illegitimate activity. Principle 2, match the stop width to your anxiety threshold. This is not about what is optimal for the risk to reward. This is about what you can actually hold without moving the stop. If a 50 pip stop makes you physically nauseous, if you cannot stop checking the position, if you lose sleep over it, then a 50 pip stop is too wide for you regardless of what the backtest says. Because you will not hold it, you will move it, you will close early, you will sabotage the trade at the worst moment. Choose a stop width that you can actually sit with. Even if it means smaller targets, even if it means a lower risk to reward, a strategy you can execute is infinitely better than a strategy that looks perfect on paper, but that you cannot follow principle 3. Match the complexity to your decision fatigue. If you have a full-time job, if you trade in the evening, if your cognitive bandwidth is limited by the time you open the charts, you need a simple strategy. 2 conditions, maybe 3. Not a 9-indicator confluence that requires 40 minutes of analysis per setup, because you will not do the analysis, or you will do it half-heartedly, or you will skip it and enter on feel. The strategy must be simple enough that you can execute it in your actual cognitive state, not in the idealized state you imagine for yourself. Principle 4. Match the session to your emotional rhythm if you're anxious in the morning, if your mind is cluttered with the day ahead, if you cannot focus until you have had coffee and settled into your space. Then trading the first 15 minutes of the London Open is not a strategy choice. It is self-sabotage. You're putting yourself in the highest volatility, fastest moving window when your nervous system is least regulated. Trade the session where you're most yourself, where you're calm, where you can see the chart clearly, where the emotional shortcuts are quietest. That session exists for you. Find it. Build a strategy around it. Principle 5. Match the commitment window to your identity. If you're someone who needs to feel like you're progressing, like you're building towards something, then a strategy that requires 200 trades before you can evaluate it will break you psychologically. You will quit at trade 60. You need shorter feedback loops, a weekly review, a 10-trade checkpoint, a structure that says, here's where you are, here's what the data shows. You're building something. Not because the strategy needs that structure, because you need it, because the operator needs to feel like the work is going somewhere, or the operator will abandon the work. And that is not weakness. That is design. You're designing the strategy around the human who will execute it, and that human is you with your specific wiring, your specific needs, your specific breaking points. But knowing these principles is not enough, because the moment you hit a losing streak, the moment the strategy feels fragile, the moment the discomfort rises, you will want to abandon all 5 principles and rebuild the system from scratch. You will want to fix what is not broken, and you need a structure that prevents you from doing that. A structure that holds you in place when every impulse says change. And that structure is what I call the strategy lock protocol. Here's how it works. You write your strategy down. Every rule, every condition, every parameter, the entry, the stop, the target, the session, the maximum trades per day, the conditions under which you skip. You write it all down in one document and you date it. And you commit to it for 30 clean trades, not 30 calendar days, 30 clean trades. If you take 2 trades a day, that is 15 trading days. If you take 1 a day, that is 30 trading days. The number is 30 clean executions. And during those 30 trades, you're not allowed to modify the strategy. Not one rule, not one filter, not one parameter. You're locked in. You have removed your own permission to change it, because the version of you that wants to change it at trade 9 is not the version of you that wrote the rules. That version is calm. That version is rational. That version has not been hit in the face by 3 losses yet, and you trust that version more than you trust the panicking version. So the panicking version does not get to make changes. The rules are locked. You wrote them, you follow them. 30 trades, no exceptions. And during those 30 trades, you track 2 things separately. You track the strategy performance, win rate, average win, average loss, expectancy, maximum drawdown. And you track your execution performance. Did I follow the rules, yes or no, on every single trade? And at the end of 30 trades, you look at both data sets. If your execution was clean, meaning you followed the rules on all 30 or nearly all, and the strategy performance is negative, then you have a strategy problem, a real one, and you go back to the surgical fix. You isolate the broken component, you fix that one thing, and you run another 30. But if your execution was dirty, if more than a few trades were emotional shortcuts or rule breaks, then you do not have a strategy problem. You have an operator problem, and you go back to the 90-second intercept, you go back to the emotional audit, you build the operator. And you run the 30 again, because you still do not have clean data. You still do not know if the strategy works. And you will never know until the operator can execute it cleanly. And here's the part that will feel uncomfortable, but that you need to hear. You might run this process 3 or 4 times before you find a strategy that fits. And that is okay. That is not failure. That is data collection. That is you learning through actual experience what your nervous system can sustain. And each time you're not starting from zero, you're narrowing. You're learning that wide stops do not work for you. That morning sessions do not work for you. That more than 2 trades a day breaks your focus. That you need a visual confirmation, not a numerical one. That you need a strategy that gives you something to do every day, or you will manufacture something. This is not wasted time. This is the most valuable education you will get. And no course, no mentor, no video can give it to you. You have to feel it. You have to live inside the data. You have to let the 30 trades teach you what you're made of. And once you find the fit, once the strategy matches your psychology and you can execute it cleanly, something shifts. The urge to modify drops. The search quiets. You stop watching other trader strategies and wondering if theirs is better. You stop scrolling for the next setup, the next edge, the next idea, because you're no longer looking for a strategy that removes the discomfort of trading. You're looking for a strategy that lets you trade inside the discomfort. And that is a fundamentally different relationship. It is not excitement. It is not the dopamine hit of a new system. It is quieter than that. It is the calm of a person who has stopped running, who has chosen, who is committed, and who is willing to be uncomfortable inside the commitment, because they understand that the discomfort is not a signal to change. It is the texture of the work. And the work is not to eliminate the texture. It is to execute inside it cleanly, repeatedly, for long enough that the probabilities do what probabilities do, which is express themselves, slowly, imperfectly, over a sample large enough to matter. And the next layer beneath all of this, the one that determines whether you can actually sustain the lock, whether you can sit inside 30 trades without reaching for the modification, whether you can tolerate the slow, boring, unglamorous grind of clean execution, is not a strategy question. It is an identity question. It is about who you believe you are when you're not being validated by a green trade. It is about whether you can be a trader in the flat weeks, in the small win weeks, in the weeks where nothing happens and the chart gives you nothing and you just sit there and do not trade. And most of you cannot, because you have tied your identity to the act of trading, to the feeling of being in the market, to the proof of the green number. And when that proof is absent, you feel like you're not a trader, and that absence is unbearable. And that is where the real fix lies, not in the strategy, not in the rules, in the story you tell yourself about who you are when the chart is quiet. And that story is the next thing we dismantle. Because if you do not dismantle it, you will break the lock. You will modify a trade 12. You will search for a new system, and you will be back here, watching this video again, hoping the words hit differently. They will not until you do.